everyone, welcome to the Ichimoku.co daily market review for the trading day ending Monday, June 2nd. Firstly to the S&P 500, and here we have a continuation of the trend to the upside today, a candle that's made a higher high but a lower low. In bar chart terms, an outside day does raise some doubt about continuation of the trend, but the prior trend remains in force. A candle where the buyers have managed to close with strong control by closing up towards the high of the current candle. And we also have this largish shadow on the bottom of the candle representing the sellers losing commitment down below the previous low and the buyers coming in quite strongly, showing some good commitment to taking this market higher. The only problem here for the buyers and the continuation of the trend is the small body at the top of this very substantial first time frame uptrend, and it does suggest that there is potential for a reversal. It's a potential hanging man type pattern, and that's where we have this small body with this largest shadow on the bottom, and it does suggest that we may see a lower high and a lower low, and potential for the market to retrace back down to around the 1900 round number level of previous resistance, which should act as fairly strong support for this market. Now, the reason that this is a potential reversal pattern is because of the very small body at the end of the uptrend, and that's the main reason why. And it means that even though the buyers have made net momentum, the amount of momentum that they made, it's much smaller than the previous candles, and certainly the previous the candle prior to today's trading did suggest that there was potential for a change of trend as well, but this even more so with the greater reduction in the net momentum, and net momentum is the size of the body. In terms of Ichimoku, we have a bullish market still in all three timeframes, so the market is looking quite healthy in terms of those longer term trends, but in terms of the short term dynamics, there is that suggestion that we may see the market pull back to a degree. And when we look at this first time frame uptrend, the market is certainly due for either a congestion or something of a pullback. Moving to gold futures, and here we see a bearish market in all three timeframes, and for today's candle we've seen the market closing down towards the lows, suggesting that the sellers have taken back control, whereas they closed around the middle point level. The buyers had just won control for the previous day's trading, testing down below the 1250 level, rejected from there. Today we've seen bearish trading down below the 1250 level, and a nice extension of the size of the black body, suggesting we could see this market at least testing down to the 1237.9 level. If this market does rally, and this current candle as it's developing is a doji type candle, but if it does rally, we could see some resistance coming around the 1250 level. But we are looking a little overextended. The extent of the trading down below the Ichimoku cloud is starting to look just a little bit overdone, and it wouldn't surprise to see this market rally to a degree. And looking at the Chica span, which is confirming the trend in all three timeframes, that is a fair way away from the corresponding price action, so also suggesting that we may be in a slightly overextended market. But what we want to do here is watch how the market reacts to this 1237.9 level. If we do trade down there, and if we trade through in a bearish manner, we could quickly trade down to 1218. But if we see the buyers come in, watch the 1250 level, and if we trade through there in a bullish manner, we could even trade up to 1266. Next to NYMEX oil, and here we've seen a continuation of the trend to the downside, a fairly large black body candle, but a candle which was rejected when it attempted to rally through the 103.39 level of resistance and through the Tenkan-sen, but also found support at the top of the Ichimoku cloud. So we have a market that's bound by close by resistance and close by support, so quite some indecision in this market, and the market really does need to make its mind up. We are still bullish in the medium and longer term time frames by trading above the cloud and the Kijun-sen, and that Chica span is above the corresponding price action, confirming that bullishness, so suggesting that we could eventually see the buyers come back into the market and trade to high levels. And that will be dependent on the buyers being strong enough to break out up above this area around the 103.39 level. Now, just looking at the Fibonacci extension, and there was a very good possibility of a change of trend when the market interacted below this 100% level. For 3 consecutive trading days we saw price action rejected from there, but no confirmation of that change of trend, and this really highlights how important it is to examine price action in relation to Fibonacci ratios. And some traders would have seen that rejection around that 100% level and perhaps have gone long regardless of what the price action was telling us. So price action here was showing rejection and the sellers losing commitment below there, but we didn't have confirmation of the change of trend. The downtrend continued on its way, and confirmation of a change of trend is always very, very important. Now at the moment we have fairly bearish trading down below the 102.82 level, the 100% level, and there is a possibility of the market testing to the 161.8% level, which is just within the Ichimoku cloud. So that is a real possibility, but really the sellers will need to be very strong to break out into the cloud and not find support at the top of the Ichimoku cloud. Now with the Fibonacci retracement, here we're seeing price rejection from the 61.8% level, so suggesting a possibility of a change of trend. And if we look here, that 50% level coincided with price rejection with those prior three candles. So a similar situation here where we're seeing rejection, but what we want to see is confirmation of the change of trend, and that would be a candle with a higher high and a higher low, and it would mean the market trading through the Tenkan-sen around that 103.30 level. And the likelihood of that at the moment, there is some doubt about whether the buyers will be strong enough to do that for tomorrow's trading.